I'm not sure able to take it completely off the table, but I agree with what Mohammed just said. I do think it's certainly incrementally better news. And the fact is that while everyone's been so focused initially on China, what matters a great deal more to the U.S. is what happens in Mexico and Canada. So I do think, as Mohammed said, the sequencing is important. First, you broker the deal with Mexico. Obviously, that puts pressure on Canada to come on board. And then as you start to kind of roll these up, the last one you wind up dealing with is China. And obviously, we're going to have some more news on the China front this week with regard to $200 billion in potential additional tariffs.
RJ, are you optimistic on U.S. growth for the rest of the year, sort of regardless of the trade headlines?
Yes, we are. We think the 4% growth is going to slow, but slow to a pace somewhere around 3%. The consumer, investment, even government spending, they're all pointing in a direction to stronger growth in the U.S. The trade wars, the trade concern seem to be improving somewhat, or fading somewhat is probably a better way of saying it, as Trump seems willing to go from a multi-front war to really concentrating on one front, which is China, and the news on Mexico and Europe is all part of that transition, I think.
RJ, we saw the dollar pull back last week, last sort of 10 trading days, in fact. Is that important for the U.S. economy's continued strength, and is that dollar weakness going to continue? Do you think we've peaked for the rest of the year?
Well, I think earlier Mohammed was making the comment about divergence. For quite some time, we felt like the world was in a synchronized recovery, say in 2017. That seems to have faded. The divergence has been strong for the dollar, but that has also created problems, putting pressure on EM. The recent turnaround in that dollar strength is probably a welcome relief valve, more so maybe for EM than the United States, but I do think it's probably good for broader markets as a whole.
Mike, where are you on your sort of risk weightings at the moment with all this considered?
We're broadly neutral on risk, although we do have an overweight in equities. Our view here is that, as was just mentioned, the macro environment is still supportive. I still think, as we saw in the second quarter, the earnings growth is still intact. And this notion that it was all simply tax reform driven, that's being put aside because much more of it was organic. So we do think that this equity market rally can continue, but I think it's going to be more measured going forward.